Welcome to the week's edition of The Link. And as businesses, you must be going through a tough time because things again seem to be pointing up. I've seen a bit of fuel coming down, but generally there are things that are happening and there are policy actions that are being taken that are going to affect you. And tonight we're here to talk about what happens in policy that you should pay attention to. And my guest tonight is Mr. John Walugembe, who is the Executive Director of the Federation of Small and Medium Enterprises. John, welcome.
Thank you, Sam, for having me here again.
I say, yeah,
it's
again.
A pleasure.
Yeah, absolutely.
It is a pleasure to be here.
Okay.
And to share my thoughts with our viewers.
Absolutely. John, let's start with the first question. What key macroeconomic indicators, and macroeconomic I mean policy, if you like, should an SME pay attention to today, especially, more than ever?
Okay, so I'll just mention, there are many, but I'll mention about three. First is inflation, the changes in the prices of commodities, goods and services. Now, government every so often announces changes in inflation, so they're going to build statistics. Now, how is inflation measured? Because sometimes things are going up, but you don't know how they are going up. So the measure that is used to measure how things are expensive or cheap is is inflation. And how is that computed? It's computed using what they call a consumer price index. So government has what they call a basket of goods, what a normal household would consume, matoke, some vegetables, whatnot, and then it tracks the changes in that basket of goods. And what we are seeing now is that we have now hit about 9% from the last period. So if you look at August now, compared to the same month last year, you're seeing that now inflation has hit 9%. This is very high because government's target is to keep inflation below 5%. So it's almost doubling. So you can imagine, and this is driven mainly by increases in fuel, which, as you know, is partly due to external factors, the fighting in Ukraine, the overall disruption in supply chains as a result of the pandemic, and an increase in other commodities as well, partly due to the conflict, yes, but also due to the increase in the global price of a barrel of crude oil on the global market. Okay. So the second indicator that you should look out for is what I would call, so inflation. Governments all over the world try to control inflation because inflation is, as you can imagine, it causes a lot of disruption for households and individuals because your income remains the same, but now you have to pay more for the same goods and services. So governments attempt to keep inflation under check. So as Uganda, we've said, we want to keep it below 5%. Now, in order to tackle inflation, government uses what they call central bank rate. Central bank rate is an indicator to commercial banks. If you want to borrow money from us, this is the rate at which you would borrow. So inevitably, banks cannot give you money at a rate that is below that.
Absolutely not.
So it means every time the CBR goes up, banks are also likely to
increase the lending rates.
And why do they do that? Because Bank of Uganda wants them to lend less to you. Even you'll think twice before borrowing from banks because you'll say, the interest rate is really high. Even for those who have existing facilities, they'll say, oh man, I'm having to pay.
Feeling the pinch.
They are feeling the pinch. So it's meant to discourage borrowers, and therefore by the CBR raising, it means the appetite. Government mops up excess liquidity in the market, means that people borrow less, and therefore banks choose to stay with those resources. So you need to look at these two indicators very carefully. There are others, but those ones are longer term. If you look at GDP per capita, it just shows the general wealth of the country, how people are becoming wealthy, so that before you invest, you must know, are people very poor or very rich? You may be bringing luxury goods here when people's per capita income is very low. So it means people are not going to buy your luxury goods. You want to sell, in your projections, you say, I'm going to sell 200,000 Mercedes-Benzes in Uganda. Just look at the GDP per capita to determine, can Ugandans afford? If they can't afford, then you may be making the wrong assumptions.
John, there is the question of fiscal policy, and I have not seen it active until now.
Yes.
the fiscal policy.
Yes.
As an SME, am I concerned?
Okay, so government has two tools to tackle the current challenge of inflation. One, it can use monetary policy by raising the CBR.
Yeah.
So that's more indirect. It's just signaling to commercial banks, please lend less and things of the sort.
Yeah.
But the other tool that it uses is what is fiscal policy. And fiscal policy, normally, there are two main routes. One, government can increase taxes.
Yes.
You know, when it increases taxes, it means you're paying more money to government.
Absolutely.
So it's still mopping up excess money from you through taxation. Alternatively, government itself can cut back on expenditure. Remember, government is the biggest spender in the economy.
Absolutely.
So government itself can control expenditure and say, let us spend less. Then people start saying, but money is lost. Yes, it is lost because government is either mopping using the CBR or it is not releasing the money. And you may have noticed that the Treasury cut back on the money that it released to different agencies. I think cut to about 4 trillion or something.
From 7.
From 7. So it means that they have almost cut the money that was released by half. I had people complaining, even for parish government model we receive less money. Yes, because government is trying to sort out the emergency of inflation before it can sort out
by keeping less money in circulation.
Of course.
Okay. Now, John, it's important that I take note of that. How can I use those facts to make decisions as an SME? Most importantly, to stay assured or afloat.
Now, we are lucky that although the Treasury released less money, they insisted that they have to pay domestic arrears.
They cleared those, I noticed, in one quarter.
So that is very good. But ideally, if government is releasing less money, be careful as you're looking for contracts, because you are likely not to get paid. But you are lucky that in this instance, the Ministry of Finance was very cognizant that SMEs need this money, and they said, please, told the agencies, whatever you do, start by clearing domestic arrears.
The debts.
Yeah, so as you look for new contracts, be careful because government is spending less. The other issue is that as you borrow, now on the monetary side, if the central bank is raising the CBR, it means you're going to have to pay more. Now you have to think carefully, because right now, for prime borrowers, they are getting interest rates of above 20%.
Imagine.
You see? So what business are you doing? Are you able to repay that loan and to keep a profit? And are you sure, do you know, now we are in an uncertain period. Every other day the central bank is coming back and increasing. First of all, increase to 7.5, 8.5, 9. You know, what if they increase
and inflation has gone up, so they might go up.
Yes,
they will go up,
actually.
Actually.
They will go up. So, you know, yes, you might manage at 9%. Will you manage at 12%? So be careful before you borrow, because you may just be borrowing, we want to borrow, but if the situation is uncertain, you have to be careful, especially to borrowing at such a time. Because I know businesses need money now, badly, but it is actually most risky to borrow in such an uncertain kind of...
How about, John, my pricing? I am goods and services. How can I factor in the inflation to determine, am I at loss? Pricing.
The challenge in this country is that ideally, as a provider, you're supposed to pass on everything to the final buyer. But can they afford? Is their income increasing? If the income is not increasing, then it means you reach a point and buyers just can't afford.
Will not appear.
You know, so you have to make choices as a business person. At what point will I discontinue a certain product because it does not make sense for me?
Business sense.
It does not make business sense, because you have to increase in order to cover your costs, but at the same time the consumer is not willing to pay more. What happens?
Good question. Final question. Is ignoring these variables of any danger to me if I say, what John is saying is, me, I'll be okay? Can I afford that?
You know, the lawyers say ignorance of the law is not defense. Just because you don't know does not mean that the facts won't. Because you see, you'll come complaining to us, now my bank is cheating me. It has increased the interest. No, the banks normally, because you can either have a fixed interest rate, which is rare, or a variable interest rate, meaning the banks in those small letters that people don't read, they say if things change,
We will change.
We
also.
will change. So now you go, my installment used to be 100 million. Now they're asking for 300. Yes, because the macroeconomic situation has changed. So please be very careful. When the central bank releases the monetary policy statement, now I see they even do it very carefully. Just look for those points and make sure you are informed. Similarly, when UBOS is announcing the inflation rate, please listen, because it might just save your business.
Okay. Thank you very much, John, for trying to bring down these subjects. I call them animals. And people don't know that when central bank announces stuff, Minister of Finance does, and others, it actually matters to you. So for now, we hope that you are able to, after these discussions, process these basic variables, economic variables, to help you make decisions. On the link, we help you make decisions in your business, but also add value to you. We hope we added value to you. That was the link. Thank you for joining us tonight.